The stats are out. Hey guys, after having already briefly reviewed 2025 in my last video, now I'm going to hit you with the numbers and realities of the Niagara real estate market as a whole for 2025 and see what that means for 2026. Special thanks to my brokerage and to our fearless office manager and statistician, Statty Patty, for the info. What were the main elements of 2025? Buyer uncertainty and out-of-town buyers being few and far between. Quick facts. Sales, they were down from 2024 by 7.7%. 2025, in fact, posted the lowest amount of annual sales since 2002 in Niagara. Prices, they went down about 3.5% to 4% in Niagara from 2024, though that's still 20.8% higher than the average Niagara home sale price in 2020. Our average sale price for 2025, $670,767. In 2024, it was $694,700. Special note, the majority of buying activity was in the lower price ranges, which brings down the average, but also shows how first-time home buyers were starting to abound last year. Another special note, condo apartments were down 23.6% in sales, and prices went down 5.7%. Opportunity and average days on market for a home to sell in 2025 went up by about 12.5% from 2024. Pricing was really touchy in 2025. Even if a home was priced just 3 to 4% too high, buyers would just look elsewhere. There was way too much choice for them. And here's a surprise stat. 2025 had 9,878 terminated or expired listings in Niagara. How many sold? 5,982. That is not normal. That means almost 40% of homes didn't sell or had to relist. As we move into the 2026 market, there's another important takeaway. Of the listings active on market a couple of weeks ago, 48% of them are vacant or tenant occupied. What does that mean? That means that these are listings that aren't supplying the other side, the buyer demand. We know that first-time home buyers and entry-level buyers are out there, but they're only 1/3 of the kind of buyers that we need to fuel the Niagara market. The other two categories, investors and out-of-town buyers. We need these other two categories in order to come in and buy up these homes, especially these vacant properties. And we need these two categories to see progress in 2026. Demand, unfortunately, is something that we can't measure. So it would be a fool's errand to make any predictions for 2026. But what can we look to? First, economic data on what's going out there in the Canadian economy. Everybody is being really cautious about that right now. Bond yields, which affect fixed rates, have stayed relatively stagnant and even crept up a little bit, which means we may not see fixed rates go down this year. The Bank of Canada seems to be holding tight to its current policy rate as they closely watch the inflation rate in Canada, which means we may not see variable rates go down in the foreseeable future either. Some are even grumbling that we might see it go up. So besides the economy, what more specific clues can we look to gauge the 2026 real estate market? Your local market watch. Keep track of sales trends. Are sales going up, down, or look to be staying the same? And look for days on market. Are your neighbors' for sale signs sitting for longer, or are they selling quicker? By paying close attention to our local market, we can track buyer sentiment. Are buyers looking like they're feeling more confident to buy again? And are we maybe heading towards turning a corner into a more balanced market? But I'll be tracking those trends so you don't have to. And I've got a book of stats if you're a nerd like me and want to see it for yourself. Just contact me at naominightrealestate.com. I'll be happy to share the latest. And cafe recommendations. One thing is for certain in 2026, we're going to need a lot of coffee.